Oil prices are showing a mixed trend this week, as rising U.S. crude inventories and upcoming sanctions on Russia are shaping the global market. Today, we'll break down what's happening, why prices are dipping, and how it could impact countries like Pakistan. First, let's look at the U.S. The American Petroleum Institute reported that crude inventories jumped by approximately 4.4 million barrels last week, significantly higher than the previous week's 1.3 million barrels. This increase suggests that supply is exceeding demand, putting downward pressure on prices. Simply put, more oil in storage means the market doesn't have to pay as much for extra barrels, which explains the recent dip in prices. On the other hand, upcoming U.S. sanctions on Russian oil companies, including Rosneft and Lukoil, are set to take effect on November 21st. These sanctions could disrupt Russian crude exports, reducing global supply and potentially pushing prices upward. However, since the sanctions are not yet fully enforced, the market is cautiously observing their potential impact. Considering both the bearish and bullish factors, analysts predict Brent oil could range between $78 and $92 per barrel, while WTI may trade between $73 and $87 per barrel in the near term. The market is currently in a mixed signal state, where supply fears and demand concerns are balancing each other. For Pakistan, rising global oil prices could mean higher fuel costs, increased transportation charges, and pressure on the rupee. Electricity tariffs may also rise as imported furnace oil and LNG become more expensive. While the government may want to subsidize fuel, IMF agreements limit such options, meaning consumers may feel the full impact of price fluctuations. To track oil prices in the coming weeks, watch 1. US dollar index. A weaker dollar can lower oil costs. 2. Weekly US inventory reports. Crucial signals for price shifts. 3. Sanctions on Russia. Will global buyers like China and India continue imports? These factors will determine whether prices rise, fall, or stay stable. In summary, the oil market remains volatile but contained. Prices are unlikely to spike dramatically, but moderate fluctuations are expected. For Pakistan, fuel and electricity costs may remain high, and consumers should prepare for gradual increases rather than sudden shocks. Stay informed and keep an eye on global oil trends, because even small changes can ripple through economies worldwide. If you want, I can also create a ready-to-use storyboard version, where each segment has exact B-roll ideas, animations, and text overlays for editing in Premiere Pro or Final Cut Pro. This makes it production ready. Do you want me to do that next?